Lentra and CNBC TV-18 Digital Lending Summit, Mumbai, India.
Now we bring to you the last session of the day, which will take us through the journey of unlocking the potential of SME through effective lending practices. I would like to call on the stage a very special guest, Santanu Basu, Head SME, Aditya Birla Finance Limited. Santanu has over 20 years of experience. He has been with ABFL for more than 12 years. He is responsible for secured SME finance, encompassing loan against property, lease rental discounting, commercial property purchase finance, as well as structured business lending and construction finance. I would once again like to call Rohit Sharma on the stage. For those of you who have just joined, Rohit is the SVP of Product Management at Lentra and is at the core of strategy creation and implementation of Lentra products. Let's welcome them with a big round of applause.
Hi, Santanu, welcome. My first question is from a personal experience and a grievance, actually. Back in 2011, I had quit IT, and I joined, I started my own business. For complete 3 years, I could not avail credit. The only lenders to me were my friends and families. Thankfully, I could keep myself afloat till the time I had crossed this barrier of 3 years. I had a profit and loss balance sheet to show. Are things changing now?
I think, when was this?
2011 to 14.
2011. I think that was just the beginning of the times when lenders started looking at whether it is safer to go less than 3 years of vintage. So I think the times are quite exciting. You are working with a lot of partners yourself. A lot of people came and spoke. I think for people in that particular stage, I think there is enough and more lending that's happening, but up to a certain ticket size. I think, and that would be sufficient for customers to kind of, borrowers to start off. So I think, yes, times are changing, and as the economy changes and it grows, I think it's exciting time for borrowers. Too exciting, I would say, because RBI, the regulator does feel that the space has become a little overheated at that end of the market.
Right.
So I think it's come up with new risk weightages for certain segments. I think good work happening there.
On the digital side, one of the things I'm confused, right? Retail is a segment that I can see clearly. Customer comes on a digital platform, particularly, does the things that you ask as a lender for him to do. But from an MSME standpoint, I do not see digital penetration still. How do you make people come onto the platform, apply themselves? I feel assisted models are better still, but there is a huge push in the market. We've been doing a bunch of projects for big banks and some of them PSU banks who are kind of now wanting to do digital journeys. But what will bring the uplift? What will bring the traffic here? It requires a lot of marketing and all of those things. So I just wanted your view. Is it like a hype cycle or is it going to stay? What is your view, Aditya Birla's view, probably on this topic?
I won't say it is just Aditya Birla's view here. What I'm going to say is I think something that we all experienced, maybe we were kids back then, is when you had this whole wave of computerized banking. You know, you go to any PSU bank in those days and you had private sector banks just about starting off. You would go to a PSU bank and they'll put up a board saying this is a computerized branch. There are a lot of others which wouldn't. And a lot of customers wouldn't have been comfortable with the computerized banking because they were just not familiar. They were not educated about the process enough. I think we are going through a similar cycle. I think as lenders, be it banks or NBFCs, we need to be prepared for a time when borrowers are going to be amenable to a fully digitized digital journey. Some part of it is already getting experienced, which is on the personal finance side, because it's easier done, right? A personal finance decision, the decision maker is the individual. The individual is going to be able to apply, is familiar with and comfortable to share his or her own finances, give the OTP. But when it comes to an enterprise, a non-individual, there's a whole myriad of different stakeholders involved. You will have possibly a CFO, a chartered accountant, or someone else who's got access to, who's managing, either someone has got access to the income tax password and so on and so forth. So getting all of them together, I think, tends to be a challenge. People, the chartered accountant may not be comfortable sharing OTP of maybe 6 different clients at different points. They're coming in saying, we have applied for a loan. Please share the ID and so on and so forth. So I think it's a learning curve. It's a curve that we all are going through. Even I wish, as a lender and driving a business of a certain size, how I badly wish that we don't have to be having assisted digital journey. It defeats the whole purpose, right? You have a digital journey, and at the same time it has got to be assisted. How stranger can it get? But I guess we are in a process of evolution, and we should be heading there.
One of the other things is also you get somebody on the platform, and digital journeys generally tend to make sense if it is kind of a straight through process, and within half an hour, 1 hour, or maybe a day, you get the entire sanction and the money in your bank. With MSMEs, I see it is difficult to do unless you have sachet size loans or very small ticket size loans. Yeah. How are you seeing some of those things play out? Plus, in addition to that, you can cut across SMEs themselves in many ways, right? By industry or by geography. And it is difficult to understand so many industries by the underwriter. He several times does not understand what the industry is. Yeah. You can't tailor-made a product for industries. There are just far too many. So what are the challenges that, are you seeing some of those challenges in your segment? How are you overcoming it? What technology help do you think is in the offing? Some of those things.
I hear some 5-6 different questions in that.
Right.
The first one, I think, I feel happy to share that as ABFL in SME, there is a certain segment of our loans. So if you look at in the industry, I think secured SME loans are loans which typically take anywhere between a week to 15 days. Using your platform, I think we've been able to make a process whereby loans of up to 2 crores, we try and give sanction the same day, which is like the best in class in the industry. We are trying to bring this down to further in terms of whether can we do it in a matter of few hours. The only challenge that comes in here is in property-backed loans, you still have to contend with the physical assessment of the property, which also we are trying to kind of overcome using again digital to kind of see how we can map different properties, different areas. But we've been able to kind of crunch that need there, and yeah, we've partnered with you on that. The other part of it, as you mentioned, is it would be very difficult. SME as a homogeneous segment would seem to be very attractive in the country, very large. You look at all sort of statistics being published by any of the research agencies, it will seem like a humongous opportunity for everyone. But you peel off layers. One of the layers will be geography, because language will be different. The way a textile trader in Gujarat would be behaving, conducting financially, will be very different from the way a textile operator in Tamil Nadu may be conducting himself or herself. So how do you make tailor-made programs? In the physical and assisted sort of world, it will be cumbersome, as you rightly said. But I think as long as we are able to come up with digital models, let's say scorecard-based models, I think it will be very easy to administer and deliver customized underwriting, which is scorecard-based, right, geography-based, and where you don't have to be really held hostage to some of the disconnects that you would have in terms of people. I think a friend from Piramal was giving a very interesting anecdote in terms of the analysis which was done. And that, I think, is one of the challenges which any lender faces. I think every human being is different the way they look at it. So I think digital is I think, a fantastic solution with as much less of assistance as possible in the journey to make customized policies for different segments, different geographies, and administer it. In fact, as a lender, we are trying out our own way in trying to do this different geographies.
So some of my questions may come out as kind of complaints, but this is like nervous enthusiasm. Now there is every new day we wake up into a new thing. There is UPI on credit on UPI is the latest one, but there is OCEN that has been there for some time. ONDC is there. Then account aggregator framework is there. Similarly, Udyam data is we are now able to get. There is huge amount of data. How are you adapting your policies? I know from a technology standpoint, I think we start to salivate on such kind of what are the immense opportunities. But how would you keep a technology company on track? What advice would you give us? And what are your own challenges on the new things that are happening?
See, the way I have seen the whole space of digital lending or digitized processes evolve over the last few years, and we both together have got a track of what, a little over 6 years?
Yes.
Of having worked together on our journey. I think the initial two partners that you would have worked with was SBFC and then, with us.
Right.
So the way it, and not only with Lentra, with anyone else, any other digital platform in the market, I think it's been a partnership. I think players like you have been around for a while. You all are talking about some great things, and it was quite exciting to see at all the new launches that you're talking about. I think it's time where platforms like you come up with innovative solutions, tech-based solutions, not just in partnership, not just in discussions with the lender, and say, hey, this is something which is innovative, not ever thought of by any lender. And this is what we bring as a solution to you all, and change the dynamics, so to say. I think it's always been about what a lender wants. We say that, okay, this is the area where we are facing problem with, and we would want to kind of relook at the workflow. Right. We would want to relook at the TAT, so on and so forth. Right. I think we are yet to see any player come up and say, while you have been thinking like this traditionally, and you've been trying to do it this way, this is dynamically different. And
I'm sure we will be doing it.
Would look forward to something like that. Yeah.
No, I'm saying that I'm sure we'll be doing it in some time. There are some new products.
Looking forward to that.
Yeah. So another question, I think Shalini Warrior in her session also alluded to this, is MSMEs. She said that MSMEs require assisted kind of this thing, and they need a little more nurturing than a pure retail kind of loan. So my question is this: 2011 to 14 is when I started off my business. If I were to start now, are my prospects of getting a loan more, or what do I have to do as a MSME to probably take loan from Aditya Birla? I'm just a startup. What kind of things would you look at now, or is that traditional thing still kind of a barrier?
I think the basics of availing a loan has never undergone change. One of the key basics is, who is the borrower? What sort of history do you have? The next is, what sort of cash flows do you have to repay, the repayment capability? And if the loan is beyond a certain size, then, what sort of collateral? I think all of this, so the entire sort of digital footprint-based lending, so to say, all of it, these are all surrogates which have been designed or which have been devised to kind of establish, part of this. So none of this has undergone any change. So I think with the ability of lenders to kind of access this information, which possibly if it was 10 years back, it would have been as much, lesser possible to access that information. So I think you stand a much better chance to get a loan. But what quantum? I think that's a different question to answer altogether. Yeah.
The other confusing thing is also, besides the digital infra that I spoke about, there is also this initiatives from the government, like there is PM Kusum, there is Jan Dhan, then there is these Mudra loans, PSB 59, I think some conversation happened on that also. Is it something that you partake some responsibility on some of these initiatives of the government, or you, how I'm a bit confused on that.
As corollary to that question, I think over the last decade or so, there is, and even during COVID, I think the government has done so much to kind of excite a lot of lending in the SME as a sector. I think in the aftermath of COVID, SMEs would have, COVID was a death blow, so to say, for SMEs, because they would have the least of, a rainy day capital, so to say, to safeguard their existence. I think the ECLGS was a very smart thing to do by the government. CGT, MSE, the credit guarantee program, I think that's another great initiative by the government. And a lot of lenders have been, lending to borrowers who otherwise may not have had access to the kind of quantum of credit they are accessing today. And of course, you have the Mudra scheme. I think there is some fantastic amount of initiatives taken by the government which don't fall in the realm of dolouts, but they are distributed, disseminated through lenders who kind of partner with the government, so to say, in terms of enhancing the credit in SMEs. In fact, I think there's some data which states that 56% of the borrowers in SME last year were new to credit. So that speaks volume about the kind of credit penetration that's happening. But despite of that, I think only 40% of SMEs have got credit from the banking, the lending system. So I think there's a huge amount of opportunity there.
Actually, my next question was kind of that. So in 2011, what I had researched, because when I was not getting any loan, we were just researching, and the figure was about 10% penetration. Yeah. I think there was a debate about whether it is 30 or 35. I think Mr. Tiwari said it is about 22 if you don't count the repurchases or balance transfers. Yeah. So what is your growth projection? When is India, I think still from a penetration standpoint, it is quite low. Even though now data is so much more accessible, there are organizations and there are technology also which can make sense of that data very, very quickly. How do you see that uplift happening? Is it the inflection point is still away, or it is yet to come? Is more work needed?
The way I see it, I think there has been a lot of excitement and exciting work which has happened on the digital lending space. But in terms of the penetration, I think it's only penetrated a certain layer of lending which is unsecured. Right. The bulk of lending, which is the credit funding which is required by SME, it will fall into so many other categories. The working capital, transaction financing, or long-term financing, which typically will be your asset-backed. It could be book debts, it could be property-backed, or others. So the learnings, I think, from what has been, I would say, a very exciting sort of journey over the last 2-3 years on unsecured is being incorporated in other spheres of lending. But I don't think, and most of it is still assisted, as we were discussing earlier. So I think as platforms on the other side and lenders on this side, I think all of us together will need to keep exploring how do we digitize the rest of it to see more action happening. In terms of the revenue potential for both platforms and for us, I think there have been enough which has been stated in terms of what is the opportunity size. Just about 30 or 40% of the SMEs have got credit penetration. SMEs are growing by almost 20-25%, year on year, so on and so forth. So I think opportunity-wise, there is no dearth of opportunity. India is growing, SMEs are growing. So yes, fantastic opportunity for all of us to invest and have this.
So one question, I think that's kind of directly to you, because a lot of your lending, particularly the unit that you had, is also collateral-based lending.
Yeah.
With all this data and consent management readily available, do you think that mortgage-based or property-based collateral percentage contribution is going to go down, because now there is surety of data, it is data coming from authentic sources, so it is more believable, you don't really need to attach a collateral. Do you see some of those things pan out?
That's a very difficult question, tricky one to answer, right? I think it will be what sort of risk you want to underwrite. If it is going to be, let's say 50 lakhs to a crore of unsecured, depending on what the lender's balance sheet size is, I think each lender would decide their appetite, what sort of ticket size you go to. But beyond that, I think there is something known as skin in the game. You would want the borrower also to kind of display reasonably decent skin in the game.
I think that was the thing that I was not willing to do that time, like put my property.
So now yeah. Okay. So I think that's very important. And so if someone wants to borrow, say, a 10 crore loan, and I think bulk of the growth in the SME is happening in the 1 to 10 crore sort of segment, you would want to see something beyond just doing an unsecured loan, right?
Santanu, I think this is a very pleasure talking to you always. I think let me ask if there is any question to Santanu. We don't get people like Santanu available for questions so easily. So anyone has any question? Yeah, please.
Many others like that. I think a few of them obviously work with Aditya, Birla as well. Yeah. What do you see their role moving forward, especially as roles are being more clearly defined with ONDC, OCAN, etc. There's a lot of initiative behind those sorts of platforms and protocols. Yeah. And of course, that also means there's more opportunity for NBFCs, fintechs, that's why we're all here today, to drive digital lending forward, right? And especially given this huge white space opportunity, so to speak, in SME lending specifically, what does the outlook look like?
So I think the opportunity is something which we all know, understand, and agree. But in terms of the role of fintechs and the role of lenders, I think that's your question. I think we as lenders are experts in credit appraisal, are experts in risk management, and good at managing balance sheets as it were. And I think each of the fintechs, depending on what is the problem that you're solving for, the solution that any of the fintechs or the digital service providers, as I would call it, that we partner with, they solve for a certain problem for us and for the SME. I mean, bridging a part of the workflow. I think each of the smaller problems, it's not our business to try and solve each of those problems ourselves. Go sit down and kind of develop a solution for each of those problems. I think to that extent, for the size of opportunity that's there in the country, I think for each of the fintechs, there is enough and more space for both the lender and the fintechs to work together, partner together, and grow together. That's how I would say, because I think the space is quite dynamic. Today I decide to invest and develop a certain solution for a certain problem. Maybe there is a different way of approaching that problem a year hence, and go invest all over again. I think as a lender, I'm quite better off partnering with you, to address that problem while focusing my core energies on lending. So that's the way I would look at it.
Yeah, I think there's one more question.
With the lending you're doing to corporate sector, you must have a lot of leading indicators, and if you tie up with the India growth story. So what are the sectors you're seeing in next 5 years going to be sunrise sectors or a high growth sectors?
Okay, so the way we look at this is there are various sectors in various geographies which from time to time they tend to kind of fall off the radar, if I may say so. So I think it is very difficult to kind of paint a whole sector with with the same brush. So textiles, for example, of late has been facing some challenges in certain part of the country because of the high volatility on the gray rates. So we would tend to kind of take a calibrated stand on that sector. But likewise, the other the rest of the textiles, so the garments are doing absolutely kind of fine. So I think it's not about 5 years is very long to kind of say that this is a sector we are going to be very comfortable lending for the next 5 years period. I think it's very important to keep looking at your portfolio, looking at the market indicators, and keep revising which are the sectors that you want to go a little overweight with, or go a little underweight with. But the way it works for us is we like to look at which are the exclusions rather than see which are the ones where we would want to focus on, because it's a large country. Even if you look at the textiles that I was talking about, as I say, you peel off layers. In textiles you will have different sort of players in the upstream and downstream sort of piece. You will have dyeing units, you will have the gray manufacturers, you will have weaving units, so on and so forth. So there are different kind of players even within textiles. So I think it's important to look at each of those components and then keep deciding. But as Rakesh, our CEO, earlier in the day stated, India is one of the most exciting stories across globally, and we are quite bullish on India, and therefore we are bullish on most of India, all the sectors.
Yeah, well said. I think we've come to an end. Thanks a lot, Santanu. It's always a pleasure speaking to you. Thank you.
Thank you.
Lentra and CNBC TV-18 Digital Lending Summit, Mumbai, India.